We've been talking about Bank of America's sale of half its stake in China Construction Bank. Well, Charlie Peabody has been doing the math on the lender's efforts to meet new international standards. He's a partner and analyst at Portales Partners and one of the most accurate analysts covering Wall Street banks. Welcome to Street Smart, Charlie. Good to have you here. It seems like the last few days, at least, we've seen a turnaround in sentiment on Bank of America. But are they really out of the woods?
They're not out of the woods. A lot depends on your macro assumptions and the litigation expense or representation warranty expense that you anticipate.
And when we're talking about out of the woods, we're talking specifically about the Basel capital requirements here. It takes a lot of fine-tuning, right, to figure out exactly whether or not they're going to meet those capital standards or miss them. How do you do that analysis?
Well, think of a ratio as having a numerator and a denominator, and there are different ways you can get to your required capital ratio based on what you do. The numerator is really the key because it's equity minus 3 or 4 big elements: mortgage servicing rights, deferred tax assets, and then these investments in unconsolidated financial firms like CCB. Those all act as drags. If you sell them off, it sort of boosts the numerator, if you will.
And you said if we enter into a recessionary period here in the U.S., it puts them in greater peril, Bank of America specifically. Why is that?
Well, because the primary way that they're going to generate capital is through retained earnings or generating net income. And they have associated with that deferred tax assets. Those tax assets act as a turbocharge. For example, every $3 billion of net income they create, they generate $4.5 billion of regulatory capital. But on the reverse, if we go into recession, they lose money, then those deferred tax assets grow in size and act as a negative or a drag on the numerator.
Charlie, let me ask you, you're considered a Bloomberg best on several Wall Street banks. You have a buy on Bank America, and yet we hear from a lot of other analysts that they are the least best capitalized, if I can use that phrase, or that they have the most problems when it comes to raising capital. Do you see it the same way?
I do. I think, given the sell-off that we've experienced, there are other banks that are much more attractive today, like J.P. Morgan, is where I would start.
What about this action with China Construction Bank raises capital in a better way than, say, the sale of a stake of preferred shares to Warren Buffett? Because people are saying that wouldn't contribute as much to regulatory capital as, say, this would.
Well, that is correct, but there is a hidden dilution in the sense that China Construction Bank paid an $837 million dividend in the second quarter. So you lose some of that earnings power going forward. And I've estimated, based on the amount of non-core assets that they have to shed, they're going to lose about $1 billion of core earnings power as they do that.
And Charlie, you have a buy on this stock. We've seen a rally over the last 4 days in Bank of America. Do you think what's priced into the stock currently is too optimistic or too pessimistic?
Well, I think the stock can rally to the high single digits, $9 plus share. But November is going to be the key month as to whether that rally is sustainable. And in November, you have 3 things. You have the Group of 20 meeting on the Basel III rules. You have a very important court date on this Gibbs and Brunn litigation. And then you also have the Budget Deficit Committee determining whether we're going to be able to deal with that or not.
And then, Charlie, Brian Moynihan, since he's taken the helm as CEO of Bank of America, he has sold a lot of businesses. I think something like 22 to 23. It's in the 20 range. What other divestitures do you think is in their near future, or is there a common share offering that's coming up for them?
Well, I think the first tack will be to shed more non-core assets. And there's a $19 billion credit card portfolio in Ireland and the UK that they want to sell. There's some Merrill Lynch real estate assets, about $1 billion, that they want to sell. But basically, they're going to focus on those high risk-weighted assets, such as their structured trading portfolio, their mortgage-related assets, and private equity. And those 3 pieces total about $150 billion of assets.
But bottom line, Charlie, when they come out and say they don't need to raise capital, do you buy that, or do you think they need to raise as much as, say, everyone else does?
If we skirt a recession, I think they're going to be able to generate it internally. If we go into recession, I think they will have to go to the capital markets.
Well, and you see financials up across the board today on the idea that global growth is there, that the global recovery is happening, whereas over the last couple of weeks, of course, we saw the financials, the big money center banks get hit hard because the concern was it's slowing. So where do you stand on that outlook?
Well, our position is that we will skirt a recession, but we'll go into a no growth, low growth scenario. But I think the rebound today is as much due to what's happening in Europe, where the liquidity crisis seems to have abated because the banks there have been able to tap the covered bond market.
Is it harder, by the way? It's interesting because obviously everyone wants these financials to be strong, and you have central bankers talking about ways to recapitalize them, yet their earnings power has been so hard hit by regulators, right? Dodd-Frank means that they can't do prop trading anymore. They don't have their own hedge funds, et cetera. And at the same time, you have the Fed flattening the yield curve, so they just can't make as much money. Margins aren't as high.
That's correct. But in the meantime, what you are starting to see is a pickup in loan growth. We've seen in the first 13 weeks of this quarter, we've seen significant pickup in loan growth versus the second, and second versus the first. So that top line revenue is probably going to start to turn by the fourth quarter.
All right, Charlie, we've got to leave it there. Thanks so much for joining us here on Street Smart. That was Charlie Peabody of Portales Partners taking a close look at Bank of America. He's got a buy on the stock.